In the world of Forex trading, the term broker is fundamental. It's the starting point for anyone looking to venture into the global currency market. But what exactly is a broker, and what role does it play in this intricate financial ecosystem? Imagine you want to trade in Forex. You can't access the market directly. Instead, you need an intermediary to connect your trades to the entities buying and selling currencies on a global scale. That intermediary is the broker. A broker is a company, or sometimes an automated platform, that acts as the bridge between traders and the Forex market. Its primary function is to facilitate the buying and selling of currency pairs, ensuring that transactions are executed quickly and efficiently. Brokers provide access to trading platforms that allow users to analyze charts, execute orders, and monitor their positions in real time. There are two main types of brokers: market makers and ECN STP brokers. Market makers, as the name suggests, create an internal market for their clients. In this case, when you place an order, the broker acts as the counterparty, buying when you sell and selling when you buy. This setup can create a potential conflict of interest since your losses might translate into their gains. On the other hand, ECN STP brokers connect your orders directly to the interbank market without acting as the counterparty. This reduces conflicts of interest and may offer better pricing, although commissions are often higher. Another crucial aspect of a broker is the spread, which is the difference between the bid price, the price traders are willing to buy, and the ask price, the price traders are willing to sell. This spread is a primary source of income for many brokers. Some also charge additional commissions for each trade. Therefore, when choosing a broker, it's important to consider not just the spread but also any extra fees and the overall trading conditions. A broker's reliability is critical. One of the first steps for any trader is to verify whether the broker is regulated by a recognized financial authority. Regulators such as the FCA in the United Kingdom, CySEC in Cyprus, or the NFA in the United States oversee brokers to ensure fair and transparent practices. Trading with an unregulated broker can expose traders to unnecessary risks, such as losing access to their funds or experiencing price manipulations. In addition to technical features, brokers often provide a variety of tools and educational resources, especially for beginners. From demo accounts to market analysis and tutorials, these resources can make a significant difference in a trader's learning curve and success. In summary, the broker not only facilitates your transactions in Forex, but also plays a decisive role in your trading experience. Choosing the right broker can significantly impact your outcomes by affecting your costs, market access, and the quality of tools available. Be sure to research, compare options, and read reviews before making a decision. In the trading world, the broker is your most important partner.